Are you a Form 4 doing business studies? Today, we are going to learn about the different business structures, the ways businesses are organized and run. Why this matters? Understanding business structures helps you know how businesses work, how profits and risks are shared, and it's a common topic in KCSE exams. Plus, if you ever want to start your own business, this will come in handy. Type of business structures. There are 6 main types of business structures. We have sole proprietorship. Number 2, partnership. Number 3, private limited company. Number 4, public limited company. Number 5, cooperative society. And then number 6, public corporation. Let's go through each one so it is easy to remember. A sole proprietorship is owned by one person. That person keeps all the profits but also has unlimited liability, meaning if the business owes money, the owner is personally responsible. Many small shops use this structure because it's easy to start and manage. Next is partnership. A partnership is owned by 2 to 20 people. Profits and losses are shared among the partners. It's a good idea to have a partnership agreement to avoid conflicts. Like a sole proprietorship, most partnerships have unlimited liability. A private limited company is owned by a small group of shareholders. One advantage is limited liability. Owners' personal assets are protected. The company is a separate legal entity from its owners, and shares are not sold to the public. Then we have a public limited company. This is owned by many shareholders. Shares can be sold to the public, often through the stock market. It also has limited liability and usually operates on a large scale, like big factories or service companies. Next, we have a cooperative society. This is owned and run by its members. Usually, the members have a common goal, profits are shared among the members, and the focus is on mutual benefit, not just profit. For example, the circus. Next, we have public corporation. A public corporation is owned by the government. It provides services to the public and is funded by the taxes. Its main goal is to serve people, not just to make a profit. For example, we have Kenya Power or the water companies. So here is our summary for today. Sole proprietorship is one owner, unlimited liability. Partnership, shared ownership, then shared risk. Private limited company and public limited company, they have separate legal entity, limited liability. Then cooperatives, member focused, and then shared profits. Then public corporation, they are government owned and they serve the public. If you like this video, make sure you like, subscribe, and share. Comment below which other business topic you'd want me to cover before KCSE exams. See you in the next video.